Well, here they go again. Europe's leaders are about to hunker down for the 18th emergency summit to try and solve the continent's financial crisis. And while markets have steadied in recent days, the OECD says the situation in Europe has only got worse. It says the shadow of recession is hanging over the Eurozone for the coming year, but Australia remains a bright spot. Neil Woolridge reports.
Another day, another Euro talkfest. But this time a split is emerging among the two strongest economies, with Germany's pro-austerity Angela Merkel facing off against France's newly elected pro-growth president Francois Hollande. And the looming political standoff couldn't have come at a worse time.
Things have begun to deteriorate again recently, so we cannot rule out the development of a downside scenario which, if ignited, could lead to serious repercussion worldwide.
The OECD has issued another bleak assessment of the global economy. It's forecasting growth among member countries this year of just 1.6%. Both the US and Japanese economies are expected to expand at just 2%, while the OECD is tipping a contraction in Europe.
Unemployment remains high in many countries, and in some it is still growing. Many countries have not yet recovered pre-crisis output levels. Public finances are either fragile or, in some cases, in a dire state.
Our current view is that there'll be a 0.5% contraction in the euro area, and indeed at the moment there's a good chance that there's downside risk to that set of forecasts, given at the moment, of course, the key question is whether Greece will remain in the euro and what impact it would have if Greece were to exit.
And Europe's troubles are weighing on the rest of the world as well. In a separate report, the World Bank says Asian growth will moderate from 10% in 2011 to 8% this year, in part because of weakness in external markets.
The EU, along with US and Japan, accounts for more than 40% of the region's exports. And European banks provide about a third of trade and project finance in Asia.
And most troubling for Australia, China's economy continues to cool at an alarming rate.
It is true that the recent data do point, at least on the external side, to a considerable slowdown. Growth in exports has come down very dramatically over the last couple of months.
The OECD is forecasting Australia will grow 3% this year, rising to almost 4% in 2013. Despite that optimism, the local share market has drifted sideways for 3 years, and the dollar has lost 10% against the greenback since March, hitting a 6-month low.
The market at the moment, as I said earlier, is pricing the European risk at the moment. It really is being driven by global events, and it's pricing in a hefty probability that we see more disruption in Europe.
The OECD and IMF are calling on Europe to take further steps to quarantine its problems, like additional money printing or Eurobonds, something that Germany in particular continues to resist.
The market is crying out for a decision, a decisive act to try to determine what's going to happen next. And we really have been going from one event to the next over the last couple of years with regard to Greece.
But Paul Bloxham says the European economic authorities have been palming those tough decisions off to politicians, leading to the ongoing stalemate. And with the political dynamic changing thanks to France's new socialist president, achieving political consensus among the Euro powers seems harder than ever.